Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. An exciting day in the markets considering it was a short trading session. We're going to be talking about that in addition to June production results from DMG and Riot. We got an exciting press release out from IREN this morning in relation to some GPUs and a deep dive look into industry ATM usage over the past few years, including the heavy hitters, IREN, CleanSpark, Marathon, and Riot. A lot to go through in today's podcast. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you think of ATM usage in the space over the last few years and if you approve or disapprove with this practice. With that being said, let's get into today's podcast. Okay guys, away we go. A short day of trading in the markets today in anticipation of July 4th, Independence Day. Tomorrow, Anthony, obviously the market's going to be closed. So we wanted to get a podcast out today, talk about where the miners finished off, some production updates for the month of June. We got a very interesting update from IREN. They were rallying extensively this morning on a big press release, and then an in-depth look into ATM usage in the sector over the past few years. You actually put together an article for Compass Mining. We have some great charts looking at the heavy hitters in the space: IREN, Riot, CleanSpark, and Marathon. So going to be an action-packed podcast today. Before we get into all that though, Anthony, Bitcoin itself showing some strength. We surpassed 110,000 earlier in the session. We're currently sitting above 109, but looking very strong for the number one token in the world.
Yeah, the 5-day graph shows starting a little bit of recovery from yesterday, and like you say, just before market open today, or as I woke up this morning, $110,000. But as market open, we had a bit of a pullback, but not a massive pullback, and we finished the day, $600 off the top. So yeah, good day for Bitcoin, good week for Bitcoin, and a good day for miners.
Yeah, it certainly was. We were speaking on the phone this morning. You excitedly said the market's going pear-shaped, Bryce. The market's going pear-shaped. I said, is that good or bad, Anthony? You said good. IREN was absolutely off to the races out of the gates this morning. They tapered off throughout trading, but overall, the miners, a strong session. Again, in terms of share price and volume, Anthony, you can definitely see there's new eyes, new investors on the sector, and that's definitely coming through in these daily trade volumes.
Yeah, IREN was $15.79 earlier this morning, and when the market opened, it rallied to over $18.50, and then it's pulled back since then, finishing the day 16.82. So another good rise, 7.4% today. Bear in mind, you got to remember what IREN's done over the last month or so. It's literally grown nearly 100%. One of the best performing mining stocks this year. And a really good day, good volumes as well. Bear in mind, we've only got half a day's trading today because tomorrow's American Independence Day, so market closed early today. But IREN still managed to have 42 million volumes. CIFR, another good performer today, 47 million. We spoke about them yesterday, achieving 50 million every day for about the last 7 or 8 trading days. Something's going on at CIFR. And the share price has really rallied. Only on the 23rd, I think it was down at $3.40. It's $6.05 at the moment. It was as high as nearly $6.50 during the day. But yeah, really standing out as well. Gryphon, again, it's maintained its continued growth, and the company now valued at $95 million. That was up nearly 12%. We don't cover DigiPower. They were up 14% today. So for those that hold DigiPower out there, another good performer. But going down the list, pretty much every miner in red. The ones that, going down the list, literally every miner in green. But there's a few that finished in the red, but only just off the yesterday's prices. Riot down 0.25%, Mara down 0.8%, and CleanSpark down just under 2%. But overall, if you think where we've for this week alone, a lot of miners will be, feeling better now than they were on sort of like on Monday. Bit Digital, big shout out to Bit Digital, up nearly 12% today. Remember, we talked about them last week when they announced the dilution of 150 million dollars worth of shares, 75 million shares at $2 each. The share price dropped to, I think, like 189 when that was announced, because obviously the market will reprice shares when you go to market with a dilution. And the CEO, Sam Tabar, came out and purchased a significant amount of shares. He couldn't believe the price at the time, but that price has absolutely rocketed this week. So that's grown like over 50% just in a week there. So great if you got into that trade. Yeah, an all round good performance. Just to quote you on the last couple of things here. Market capitalizations, IREN passed through the 4 billion mark today for the first time. And we've also got the likes of Core Scientific, now over $5 billion as well. Mara's still heading the table there. They're close to $1 billion or $900 million ahead of Core Scientific. They're at 6.2. You've got Riot at 4.3 billion. You've got CleanSpark at 3.4. So IREN having a really strong performance. Couple of months ago, they were less than $2 billion. So that's been a real change. Same with Core Scientific as well. They've had a massive move this year. So hats off to both of those two stocks there. But all round, if you look at all the valuations now, you've got many of the miners, Wulf, Bitdeer, CIFR, all above $2 billion. So a lot of money moving back into the mining space there as we see this Bitcoin price continue to rise.
Really strong session for the miners, Anthony. Now I want to take a look at the longer time frame duration table here as well, now that the markets are closed. Before I do though, you guys, we wanted to do a quick plug for Miner Madness 4.0. That starts on the 7th of July. So make sure you get your entries in. You're going to need to go to the website, sign up for the newsletter. That will automatically send you the entry form. You can get your picks in there. Great pricing, again, available. And we're going to be hosting a winning interview, top leader on the regular board, the analyst board, posting that on our YouTube platform and website. So make sure you sign up. Under a week left, you guys. Going to be an awesome competition. With that being said, Anthony, walk us through what you're seeing here on the higher time frames. Again, as we talked about yesterday, green starting to take over the board here.
Yeah, absolutely. A lot more green on the board than there has been in previous days and weeks. Interesting now, we've got more than half the miners are now positive year to date. We've talked about that pullback from November, December last year. If you didn't get out your shares at that point in time, you were part of that group that where prices just dropped, probably 60, 70%, all the way down into February. And then the recovery started in March through April, May. And as you can see from there, year to date now, we've now got a few of the miners, showing really good growth from that period. I mean, IREN 71% up year to date, CleanSpark 33%, Core Scientific 28%, CIFR up 30%. CIFR, we just mentioned before, they've had a great rally over this last week or so. And look at the month change there as well. Some massive moves just in the last month. IREN at 89%, CIFR at 76%. Those are the notable ones there. Core Scientific up 53%. And you can see with all those three companies there, all very much focused on delivering HPC, whether it be through an integrated system, demand on service system, or through a co-location in the way that the likes of Core Scientific have with CoreWeave at the moment. So really positive moves in the market, and maybe more of these to come. In terms of shares close to their 52-week high, well, IREN achieved its high today. You can see that there, 52-week high, $18.54. It's pulled back 10% now. Core Scientific was very close to its 52-week high. It's only 3.5% off that figure there. So again, we know that's had a really good rally. There's a couple of shares that need to. Bitfarms had a reasonable week this week. Bitfarms, it's managed to pull back from that lows. It was in the 70 cents range for a few days, but now it's over $1 again. That'll be good for the SEC. It needs to stay over $1 now for at least, I think, a month or so to stop the clock on the 6-month position there. but that's shown some good movement today. It was as high as $1.12 just before market open, so it's pulled back probably about 10% as well today. But yeah, ones to look out for there. Yeah, let's see what next week brings.
Yeah, some big opportunity in the Bitcoin mining space right now. And we talk about this trifecta, the HPC re-rate, the improving mining fundamentals, and then the overall Bitcoin price as more and more people continue to buy both corporately and on an ETF or individual basis. So a lot going on in the space. Another one to be excited about here, Anthony, DMG Blockchain. So they just came out with their production results for the month of June. Again, we see some curtailment, some weather-related issues in the report here. We can walk through that, but they are talking about expansion even outside of British Columbia into potentially another Canadian province. So some optimism on the horizon here, but again, similar to some of these other results we've seen so far, weather impacting the story in the month of June.
Yeah, we're going to see that theme as we see all these updates come through. Many of the miners have been impacted by curtailment. With DMG, they had curtailment, but they also had an unscheduled electrical outage for nearly 2 days at the Christina Lake facility. And they've also had some challenges operating its hydro infrastructure there. And they're looking to move their mining business into another province, and that province may well be Alberta, where you reside, Bryce.
Yeah, it certainly could be. We've talked about this with the team a number of times. We've seen Bitdeer, for example, Marathon start to get involved with some of the natural gas production here in Alberta. This is seen as a big opportunity as a lot of this gas is flared or essentially wasted, so very low cost of power. So it'll be interesting to see whether DMG is targeting Alberta or maybe another province, but nice to see some expansion here in Canada. They're also looking to expand with the Canadian government on the HPC AI side of things as well. We talked about that Malahat Indigenous partnership for AI HPC data centers. We're also seeing in this update some continued developments or discussions with the Department of Defense and the Canadian government as well.
Yeah, a lot of things happening at DMG. In terms of their production, though, we'll focus on that for a minute. Bitcoin mined 23. So that was 26% less. There's obviously a day less mining, so that would account for 3% of it. But that just shows you the impacts of some of the issues they had there when you're losing over 20% of your production due to weather, due to energy, electrical issues, and due to infrastructure as well. So, 26% down. If you look at the operational hash rate, they're only able to achieve 1.56 exahash, which was 17% down on what they were achieving the previous month. And in the previous month, they were also curtailing. Bear in mind, they've got 2.1 energized hash rate there, so significantly underutilized during the month of June. In terms of Bitcoin sold, they sold 32 Bitcoin. They hold in their treasury 341 Bitcoin. That's valued at about 36.5 million as at the end of June. And if you look at that value compared to the market capitalization, it reflects now 87%. Now, in the previous month, it was 88%. And if you look at the HODL values there, they're about the same amount, 36.5 compared to 36.6. But what we've noticed with a lot of the miners now is the actual valuation of the miners has increased. And DMG have also had a couple of good days this week, seen that valuation increase there. So the percentage has come down, but bear in mind, when you compare this treasury to some of the Bitcoin treasury management companies out there that are sprouting up left, right, and center, this is not giving any premium at all to the Bitcoin miners. And we'll be looking more and more into that sort of narrative maybe next week and do a podcast highlighting why are some of these companies like Strategy, like Metaplanet, like the Smarter Web company getting significant MNAVs compared to the Bitcoin miners, and try and understand why the market's doing that.
Yeah, it's a good question, and I think a good topic for a podcast as well. Now, the next production update we wanted to get into is Riot. This one's interesting. We're going to talk about curtailment again, but in the case of Riot, Anthony, unlike many of the other players here, if power prices are high, because of their PPA, they can actually sell power back to the grid. So you're going to see a large increase on this production report in terms of power sales, or BTC equivalent as you like to convert it. But again, the weather impacting overall operations. However, Riot uniquely positioned to almost capitalize on that.
Absolutely. So in terms of their production, it was down 12%. Again, shorter months, so that would account for probably 3% of it. But when you look at the what they were doing, because their production was down, they're able actually to benefit from power sales and demand response credits in the state of Texas there. So if they follow the 4CP program and they curtail at the times of the day that are given to them, they'll receive less transmission fees on future power costs. And if they are curtailing because the power prices are high at their Rockdale facility, they're able to maybe switch off, avoid that, and actually utilize that power to achieve power sales. And in the month of June, they achieved 5.6 million power sales. Now, if we convert that to an equivalent Bitcoin, just for illustration purposes, it's 52 Bitcoin. So while other miners are curtailing and not getting that benefit, Riot are absolutely benefiting from the fact that they can curtail and really get some benefit. Now, a couple of years ago, during this 4-month period, the 4CP period of June, July, August, and September, one of those months, I think they'd achieved something like 31 million. Now, we might not see that number again, but already June is a higher performing month than June last year. So if it stays warmer out there, the chances are we'll see these power sales continue during the next 3 months as the weather increases and curtailment increases at the same time. But it's certainly a good backup plan for Riot. In terms of fleet efficiency, 21.2 remains the same as May there. They haven't changed the hash rate either. Total hash rate 35.4. Operating hash rate was 5% lower, and that will account for the curtailment that they used there. I think what highlighted me on their report this month was energy prices coming down on average 11%. So in May, they were achieving 3.8 cents a kilowatt hour. In June, 3.4 cents a kilowatt hour. Any power cost with a 3 in front of it, in my eyes, is a good power cost to have. Some of the other miners there, it's 4, 5, maybe 6 cents a kilowatt hour. Riot and the likes of IREN, both operating in Texas, have been managing to achieve in this sort of 3 cents. CIFR also in the very low threes. In fact, some of their facilities, it's actually sub 3 cents a kilowatt hour. So while they're maybe not getting as much Bitcoin mined, the power costs associated are coming down, so the margins are improving there. In terms of HODL, that actually increased this month. They only sold 397 of the 450 mined, so they added an extra 50 Bitcoin to their HODL. That's now a total of 19,273. The value of that is just over 2 billion, and that represents 47%. Now, again, you can see that the HODL actually increased from the month of May to the tune of 53 million. But Riot's share price over this last month has done really well, and you can see the actual HODL now represents a much smaller proportion of the total market capitalization, 47% this month, as opposed to 66% during the month of May. That's the impacts of the share prices rising. So as I say, it just reiterates what we said about mining stocks in the month of May and June had a really good period.
Certainly did, and appreciate you walking us through the 4CP update there and how that impacts Riot as well, Anthony. Now, next up, this was kind of a curveball, honestly, this morning. Woke up, saw an update from IREN expanding their AI cloud with the purchase of 2.5 or 2.4 thousand NVIDIA Blackwell GPUs. So we've really been fixated, obviously, on the 50 exahash milestone, the efficiency of the fleet, the Horizon 1, and then the Sweetwater campus. There's so much going on at IREN. We've almost forgotten about their operations here in Canada and BC, but they've been talking about expanding this. I was actually on a Spaces with Mike Alfred, a director on the board at IREN, talking about this expansion. They've been expressing opportunity to maybe look at some more vertical integration strategies. Appears that's exactly what they're doing with this move.
Yeah, this is buying some of the Blackwell latest generation GPUs. They've purchased 1.2 3000 B200s and 1100 B300s. That 2400 GPUs added to their 1900 Hopper GPUs at the moment gives them a total of 4.3 NVIDIA GPUs at the site there. It's this new set of GPUs has come at a cost of about 130 million, and that is fully funded at the moment through existing cash that they hold. I mean, bear in mind, IREN sell their Bitcoin on a daily basis. Last month they achieved, I think it was like $67 million in $67 million in revenue from selling Bitcoin. So June will certainly be an equally good month for them. Now they are looking to evaluate a range of financial alternatives to support the AI cloud services growth that you were reiterating there a minute ago, the likes of Horizon One, the likes of Sweetwater One, which comes online in 2026, and Sweetwater 2 in 2027. Those are going to require some big fit out. I would also go on to say that Prince George, where all these new Blackwell GPUs are going to be situated, can ultimately host more than 20,000 with the 50 megawatts of power that it's got there. Now, even sort of like doing some very simple maths there, if you're buying 2,400, which is probably about 9% of the total of 20,000, that's $1 billion just in GPUs. So, it's not for the faint-hearted, this. We remember when Dan came on the podcast and he talked about the sort of like the payback on the initial GPUs they got, and he was indicating it's sort of a 2-year payback. Hopefully these Blackwell GPUs can beat that payback time, because what we're seeing in this sort of space is we're seeing more updated machines coming out far quicker than, say, if you compare to, say, the mining industry, where we've looked at the ASICs increasing from the S19s to the S21s to the S23s. We've seen the GPUs really quicker, because IREN have been in this space probably about 18 months now with their original set of GPUs, and now we're all into Blackwells and what's the next advancement. So, from my perspective, it's quite challenging to prepare for that technological growth when you're trying to fit out large sites, and how much capital you should be putting into place in the early part of that. But IREN have proved that when they do something and do it well, and they're getting the rewards of what they're doing now from a market perspective and also from a retail investor perspective, because it looks to me that they're head and shoulders out there in front of everybody else in terms of people are talking about this company more than the other miners at the moment. They've definitely got the ear of everybody.
Yeah, definitely some strategic moves here. And you got to think they're already known, IREN, in the industry for building high quality tier 3 data centers. They're now doing the direct liquid cooling or direct to chip liquid cooling. Now they're operating at fairly large scale, their own GPU AI clusters. So getting that operational experience, really bringing that all together, Anthony. But another very strong move for IREN today in terms of the press release and share price on this news. So exciting development there, and one we're going to continue to watch. As you say, up to 20,000 GPUs could be supported in Prince George, British Columbia, Canada. Now, the next segment here, this is going to be an interesting one. A lot of people have asked for this coverage on the channel, looking at ATM use in the Bitcoin mining sector over the last few years. So this is a highly controversial topic. A lot of people look at ATM, especially in the retail community, allergic reaction immediately, thinking about dilution. Some people, on the other hand, look at this as the opportunity to create value for the organization as this money is raised and then put into the growth of the company itself. So, Anthony, you've actually had a published article in Compass this week talking about ATM use from the big four in the industry: Marathon, CleanSpark, Riot, and IREN. We're going to go through each one in detail, but at a high level, what were your overall findings here?
Yeah, so from a high level, I picked these four, and to be honest with you, the majority of miners have used them, but nobody's used them as much as these four companies. Bear in mind, when I started in this space just over 5 years ago, the likes of Riot Platforms and Mara Holdings were using the ATM there. They were the first two miners to be listed on the Nasdaq. That brought in a wealth of expectation in terms of capital, US miners as well. So US miners on a US exchange, and they were using them ATMs, which is an at-the-market offering, effectively a dilution, but you get the opportunity to sell the shares when you want to sell the shares. So when the market, when maybe the share price is higher than expected, you can sell some shares and get a good return. So the capital raised from selling the shares goes back into the company, and effectively, unlike a dilution where you go to the market and basically tell the market you're going to dilute at a prescribed price on a prescribed date, an ATM offering can be over a period. It could be over a short period, maybe a 12-month period, or even a 2 or 3 year period, and you only get to know the sales in an ATM when earnings are released. So when earnings are released, miners are required to include in their tables the amount of ATM shares that have been issued and the capital raised from those ATM shares. So as this has been a sort of a topic of contention, over the last few years, I just thought, actually, let's go through and have a look from each of those 4 miners, what they have done in terms of using an ATM. Now, this is one lever that is open to the miners, and it has been, in hindsight, a really effective lever. I'm not here to put negativity on the use of an ATM. Miners, have got a number of levers they can use. They can go to the market and they can raise debt. We saw that in 2021, 2022. That didn't work out great for a lot of miners. A lot of miners had a lot of debt and were paying that debt all the way through a Bitcoin bear cycle. So some miners literally selling the kitchen sink to stay afloat. ATMs has helped, a number of miners, and no more so than the 4 we're going to talk about today. Also, miners can sell Bitcoin and use other types of Bitcoin-backed products as well. And then we have things like convertible notes, which have been more so in more recent times. Mara Holdings have actually used convertible notes over a number of years to raise capital and been very successful, because if you can let the market know, what that's going to be used for in terms of growth, and the market recognizes that you're a good operator, then the level of interest rates on some of these convertibles can be really low, and in some cases can be negligible, I mean zero rates of interest. Now, there obviously, there is a premium that a note holder will have in terms of the conversion to share, so it's not like it's free. But, the ATM itself, which we'll cover today, is more about the ability to, raise capital very, very quickly with these in place. And we'll go through each of the company, what they've done, and then we'll come up with a consolidated table just to show you the impact of the period. Now, bear in mind, Mara Holdings and Riot Platforms were operating before the likes of CleanSpark and the likes of IREN as public companies. Those are actually quite relatively new public companies in the mining space, and look at where they are now in terms of hash rate. Both those companies currently have over 50 exahash in operation, and 3 years ago it was low single digits. So come a long way from there, but Mara and Riot were operating well before them, and that's why there's a few more years of records for those two. But let's have a look at those as we go through.
Yeah, sounds like a plan. So the name of the game with ATM, and we've talked about this many times on the channel, issue shares at the highest price possible so that you're overall issuing the fewest shares possible and minimizing that dilution. Now, you just mentioned that these big 4 have done fairly well in terms of executing the ATM over the last few years. The first one we're going to look at is CleanSpark. Now, they've made a notable pivot away from the ATM strategy late last year, I think around November, basically stating they're no longer interested in diluting. They've actually bought some shares back. However, they have used the ATM extensively over the last few years, I think quite successfully as a shareholder, to really establish themselves as one of the top players, now hitting in excess of 50 exahash per second.
Yeah, they have used it well. We've talked many times. If you go back to October 2023, and the company was valued at around about $600 million. And at that point in time, they were really using the ATMs. In fact, between January and March 2024, they raised just during 2 months nearly 500 million via an ATM, and then issued a further notice on the 28th of March to raise an additional 800 million. And if you think what, that capital that they've raised there has aided them to increase their fleet hash rate and achieve 50 exahash, effectively ahead of their target timeline, which was the end of June. They actually did it earlier than that. So, kudos to CleanSpark for delivering that. And at the same time of growing that hash rate, they've also expanded their treasury holdings to 12,500 Bitcoin. So if you're raising your treasury holdings month by month, and they weren't selling Bitcoin for well over a year in some part of time there. And so to pay for all your costs, you're using the ATM program not only to raise capital for growth, but to cover your operating costs as well. And the thing about it, they've done it really quickly. Now, you're quite right. November came and they said they're going to stop using the ATM. The share price had been depressed. I mean, it dropped. It was at a high of $25 back in, I think, end of March, early April 2024. We haven't seen those sites anywhere since then. And they made a commitment not to use the ATM until the share price reached a minimum of about $20. So they do have an ATM in place, but they're not going to use it until they reach a minimum of $20. Now, if we look at what they've actually raised over the period, they've actually issued a total of 257 million shares through an ATM, and they've raised a little over or close to $2.2 billion. Now, if you look at the total shares in issue, the ATM as a percentage of those total shares is very much over 90% of the total shares is through the ATM. So remember, when companies form, the initial investors get shares, and there'll be things like stock compensation that's issued to some of the senior directors and managers in the team, and so that the rest of those shares are made up from those sorts of instances there. So you'll always find there is a gap between ATM and the total shares in issue. Not every share is issued through an ATM. There are a number of other ways that shares are issued during the year. But I specifically went through all the earnings reports all the way back from 2021 and looked at how they've managed that, and you can see the year ending the 30th of September 2024, in that 12-month period, $1.2 billion raised through an ATM, selling 106 million shares effectively. So yes, they're not selling any shares at the moment through the ATM, but they made a great deal of getting a lot of shares sold over that period in time to get to where they are now in terms of 50 exahash, with a guide or a guidance to get to 60 exahash this year.
Hey, now speaking of 50 exahash, another one that just came across that milestone, IREN. So we've talked a lot about IREN even in this video, Anthony, but ATM usage specifically, another strength I would say for the management team here, executing very well. Now, I know in our most recent interview with Dan, we did talk about recent ATM usage in the $6 range. However, overall, again, as a shareholder in IREN, very happy with how this company was able to convert capital into growth.
Yeah. So IREN only literally IPO'd towards the end of 2021. So literally now about 3.5 years as a public company. And they've utilized the ATM again really well, more so in later periods. They weren't using it as much as other companies in those early days, but they've managed to utilize it in these later periods, and they've grown significantly. If you go back literally 2.5 years ago, their hash rate was just a fraction over 1 exahash. It's 50 now, so that's 50 times growth in hash rate over that period. Now, to do that, they've issued 185 million shares, so significantly less shares issued than CleanSpark, and they've raised obviously less money as well, 1.3 billion capital. That's been put to good use, delivering both their data center strategies. They're focusing on obviously the Bitcoin mining to get to 50 exahash. Now they're obviously going to put all their focus on delivering high performance compute, be it through a co-location or through an integrated process like they're operating at Prince George facility there, which we've already spoke about on the podcast. So they've done that very, very quickly. They are still using the ATM now, so we'll find out when their next update comes out. And now that they're using US GAAP accounting, we'll start to see more streamlined updates in terms of earnings quarterly and earnings full year, so we can gather that information really, really quickly. One thing we can talk about, that delivery of 50 exahash, they've done it very, very quickly. We've already explained that, but they're also the most efficient fleet as well. So they've used that 1.3 billion to some good effect there. They've got all the latest mining machines. They're achieving 15 joules a terahash, which is lower than CleanSpark, who are their closest rivals, and also the likes of CIFR and Marathon and Riot also close on the tails there. But IREN have got the most efficient fleet, and they've also highlighted through their recent update that as they've now got to 50 exahash, they can start improving their cost, their cash cost of production. And they quote at the moment now at 50 exahash, they can probably mine a Bitcoin for $41,000 per Bitcoin. That's just the cash cost element. It doesn't take into account depreciation, which would be the repayment of the machines and the repayment of the infrastructure, nor does it cover things like stock compensation or increases in asset values over the period. But from a pure cash perspective, so you're getting your revenues in by selling your Bitcoin and then you're paying all those cash costs out. At the moment, they're making over 60% in operating margins, which considering we've had a halving last year, is absolutely exceptional. No miner gets anywhere near that figure, as we'll see when the next set of earnings come out. Now, as we said, now it's the focus now is on delivering Horizon 1, which is the 50 megawatt liquid cooled AI data center at the Childress site, and that's due for delivery in Q4. And as we've said before, the two HPC data centers are in procurement at the moment to be energized. Sweetwater 1, which will happen in April 2026, and Sweetwater 2 in 2027. As you say, if you want to do a very quick comparison there, obviously less shares issued, less capital raised, but achieving that 50 exahash at the same time as CleanSpark. So I think within just over a week within each target.
Yeah, and hopefully they're taking advantage of the ATM this week on the share price strength. Now, the big player in the space right now, Anthony, by market cap, by HODL, and by exahash, Mara, we wanted to talk about them as well. They've used the ATM, obviously, to aid in the growth where they are now. Again, a long history here in the space, but looking at their track record, I would say fairly effective utilization.
Yeah, they've been using ATM, as I say, over the last five years, and using it really effectively and using it much more aggressively than some of the other miners that we've talked about already. Even in the early issues, they had significant amounts of capital raised through the ATM sales. And I talked about that, being on the Nasdaq as the first effective mining company to be listed on the Nasdaq, it gave them an opportunity to raise significant amounts of capital. And as you can see from those, the early periods, go back to the period ending, December 2020, when this company had literally less than 1 exahash, and they'd raised 300 million in that period there. They raised another 237 million the year after, 361 million. In the year of 2024, $1.8 billion was raised as well. So they've made really good use of the ATM. They've sold a total of 277 million shares. That's about 20 million more than CleanSpark, but they've raised 3.5 billion. They're a $6.2 billion company, so they've made good use of that money to get to that size. However, going back to the days of 2021, I remember when the share price spiked for more, albeit for a short period of time, so we won't dwell too much on it, but the company valuation in 2021 reached a peak of about $8 billion. So we're still playing catch up from those periods. I hope there's no shareholders on here that bought shares during that very short window when the market rallied during that period. Yeah.
Yeah, a lot of people asking or wondering if we'll ever get back to those all-time highs we saw in the last cycle.
Yeah, absolutely. And the share price has started to rally now. It needs to go significantly more. because obviously they're a much bigger company. And we talked about $8 billion in 2021. They had less than 2 exahash then. Now they're an operator at 58.3 exahash and growing. They just announced that they're growing to 75 exahash this year. That's the highest target of any miner for the year to date. Riot did have a higher target previously, but now focusing on HPC for their 600 megawatts at the Corsicana site. Now, one thing that Mara stands out from all the miners is the fact that they've aggressively raised their Bitcoin treasury, which currently stands at close to, I think it's 49,940. This article was written obviously a couple of days ago before their announcement, but they're only 60 Bitcoin short of 50,000, and that has a value well over $5 billion. And so the company has maintained this policy throughout the years of retaining most of the mine coins, and they've even, a couple of instances, bought more on the market using convertible notes to do that. And so, the ATM and the recent convertible notes have provided, a lot of benefit to the company without having going out there and trying to utilize what we call high cost debt, some of that debt we talked about earlier. And the proceeds themselves from raising this funds have been used to help, finance renewable power projects such as the Texas wind farm acquisition and insulating margins from energy volatility. One thing we'll say about Mara is they've moved away from that asset light strategy that they used back in 2021, 2022. They've started to purchase their own sites now. We'll get an update from the company shortly as to how much that is and what the target is. I believe it was hoping to get to 80% of that target, which will give them a far more better control and also at the same time reducing the costs of hosting as well. So miners have got to do everything within their power to keep those costs down there. Mara, the biggest miner, effectively had their whole fleet hosted with a number of companies. And from my point of view, control when you're in that sort of space is a challenge. You can't determine whether your machines are getting operated or repaired quickly than others. And you can't determine the production or the times they're switched on and switched off. If you own your own sites, you do have a little bit more control over those areas, and I think that Mara have now realised that and have gone full out there to purchase a lot of their sites, and they do own most of the sites that they operate in now. I think we'll find out how many more they've got to complete that, but it looks to be the right way to do it. And also interesting that they're going to use their Bitcoin mining to support high performance compute in terms of balancing the grid. So that's a really interesting concept. I did write about it on a previous article there, so go and have a look through the Compass Mining articles, and you'll find that wanted literally a few weeks ago, and explains all about what they're trying to do there in a way to have these two industries working alongside each other and not in competition with each other for power.
Yeah, apparently quite complementary to each other, these two uses of power. So interesting read in that article, Anthony. Now, you just made reference to Corsicana, obviously Riot Platforms' flagship facility. They're looking to have multiple uses of power at that location as well. So they built out all the Bitcoin mining. Now they've pivoted to use the remaining 600 megawatts, as you mentioned, towards HPC AI. They've also been using the ATM in big part to develop this Corsicana property or location. Why don't you walk us through them and bring us home here?
Yeah, so to be honest with you, it looks like it's right. Have literally mirrored what Mara Holdings did over the period. They've also issued about 277 million shares. Seems to be literally the same number through the ATM program. Again, that's generated over $3 billion in capital. They've used that to great effect, in using shares to purchase the site at Rockdale, in terms of growing their large micro BT WhatsMiner orders, as we've seen firsthand by visiting Corsicana. So they've got 400 megawatts of micro BT they've got 400 megawatts of micro BT miners there that's specific for immersion cooling. So when the miners arrive, they literally just have to be placed into the coolant. Whereas with regards to other areas, maybe miners have to be effectively the fans taken off and some of the working parts removed before they can do that. So with these ones here, very more efficient way of doing it. MicroBT have realized that clients need to be ready to do things quickly, and they've met that requirement by building machines fit for purpose, and Riot have done that there. So they continue to raise capital. It's been a very good way. If you look at the years they've been obviously raising that 3 billion over a similar length of time that Mara raised theirs, and you can see 2023, 2024 where they raised effectively 1.7 billion dollars. And obviously that was focused on delivering Corsicana. And we'll see, I would imagine we'll still see the ATM continue. They've also had some convertible notes recently. They used some of that to buy Bitcoin as well. So they've also grown their Bitcoin hodl well over 19,000, I think 19,273 Bitcoin at the moment. So again, Bitcoin balance of over $2 billion. They're very good at, always have a very significant cash balance as well. But there is a reason for having a significant cash balance, right? They do have that PPA agreement at Rockdale there. And the PPA agreement requires mining companies to have cash to cover any sort of margin calls with regards to power. And so that's some of that's required to there. But also, in case of opportunities arrive, and we've known that they've made some strategic purchases with regards to block mining, so they've managed to purchase that there, and they've grown significantly. The hash rate at the moment 35 exahash with a target of about 38.4. So they've now literally completed their Bitcoin mining growth. There'll be a few more machines being swapped over to get to that target, probably during the remainder of the year, but full focus now is on that 600 megawatts that we've seen available at the Corsicana site to deliver a HPC co-location deal. That will require, a significant amount of funding just to get the buildings, get the power in place, etc., etc. But we know to get to where they've got to at that site at the moment with the 400 megawatts of Bitcoin mining, how that's happening in such a short space of time. There's no doubt they can operate relatively quickly to get the remaining 600 megawatts where it needs to be if the deal is struck in the near future, and we're all fingers crossed hoping that happens.
So there you go, folks. A deep dive look into the ATM usage in the Bitcoin mining sector by popular demand. Again, as I say, Anthony, this one has been requested in the comment section many times. So with all things considered here, looking back overall, do you think ATM usage in the sector has been warranted? Has it got these companies in a better overall position? And what would be kind of your closing statement here?
For me personally, this is a personal view. I think they've utilised the ATMs really well. You're not telling the market how many shares you're selling on a daily basis. The market tends to find out 4 months after the sale, and by that time, if they've utilised the funding really well to grow hash rate, buy more facilities, buy more companies if they're in the market for merger and acquisition, that will then alleviate any of the sort of feelings that shareholders or institutional holders have once it's come out. But actually, if you think about these ATMs, shareholders have to approve the concept of having the ATM in the first place. So they don't get approved unless the shareholders vote for them. We know that the miners are also using preference shares now to help that vote get over the line in a couple of instances. But look at the miners who've used the ATM really well. Look at the miners that haven't, and look at their hash rate. These 3 miners have used it really well, and 3 of them are over 50 exahash. Riot at 38.5 at the moment, or their target 38.5. And Mara will have a target of 75, and CleanSpark will have a target of 60. IREN won't have any further miners added to their list there. They've now reached their target, fully focused on HPC. But if you take the capital raised through the ATMs, look at that hash rate that's been delivered, and then look at the cost value per exahash, that comes up with an interesting concept there. Now, it's not all things being equal, because companies will have done a lot more things to raise money. So, the likes of IREN, they've sold their Bitcoin, so they don't have a treasury position. Also, some of these companies will have used loans over that 5-year period. They will have used other levers to raise capital. But the ATM was really the biggest part of that capital raise for all these miners. I just thought it'd be interesting just to put, the value of what the hash rate they've got now and value as per the ATM. So yes, the numbers will be slightly different, but it just gives you an understanding from a very high level what the cost was to grow that hash rate. And as you can see, it's quite disparate between all four of them. So, but this is really just one metric. Don't take this as like IREN have managed to produce the cheapest hash rate to 50, because we know there was other levers that they used to get there. They've got no HODL treasury balance. The other three have got significant HODL treasury balances. In fact, so significant that they're probably all in the top 6 companies worldwide, public companies that have Bitcoin on the balance sheet.
Yeah, they certainly are. And you're right, Anthony. I was going to say the same thing. This is just another tool in the tool belt here, guys, or another way to value or look at these companies. So, a great deep dive look. Let us know your thoughts in the comment section below. Which of these companies do you think utilized the ATM most effectively over the last few years? And what's your stance on ATM usage moving forward? It seems to kind of fallen out of the limelight this year, Anthony, as companies shift over to convertible notes. So let us know your thoughts. Feel free to subscribe, hit the like button, sign up for the newsletter, and we'll see you back here tomorrow.